Hi everyone, welcome to today's market review and market performance. On the second day after the announcement of the midterm budget, the Indian stock benchmarks BSE Sensex and NSE Nifty both rose by nearly 2%. Nifty touched a historic high of 22,126 points in the morning. At the close, the Sensex index rose by 431 points, a gain of 0.6%, reaching 72,077. The NSE Nifty 50 index rose by 158 points, a gain of 0.73%, reaching 21,855. The Reserve Bank of India cracked down on Paytm Payments Bank, limiting its acceptance of new deposits and credit transactions after February 29. As a result, Paytm stock price dropped by 20% for the second consecutive day. Top gainers in the Nifty index included BPCL, Power Grid Corporation, ONGC, Adani Ports, and Coal India. While losers included Eicher Motors, Axis Bank, HDFC Life, and HDFC Bank, also HUL. The oil and gas index rose by 4% today, while IT, metal, real estate, and power indices rose by 1.5 to 2%. BSE Mid-Cap Index rose by 1% and the Small Cap Index rose by 0.6%. And let's talk about today's news highlights. The Finance Minister has correctly chosen the path of fiscal consolidation, a very strong stance taken in an election year. While on ground, voting largely followed the convention of maintaining a status quo. Bold statements were made with sufficient reasons to be satisfied with the outcome. Leading public sector lending institutions are expected to report weak profits for the third quarter on Saturday, primarily due to increased operational expenses stemming from wage adjustments and pension costs. According to the average forecast of 5 brokerages, net interest income for the quarter ending in December is likely to grow by around 6% year on year, while net profit is expected to decline by 12% year on year. Dinesh Kumar Khara, chairman of SBI, stated, "Deposits in the economy are a function of the overall systemic liquidity." And this is part of the story. The other part is that if it's not in the banking system, then it either exists in mutual funds or in life insurance. So the fact remains that these deposits either enter economic activity through the banking system or through the market. And that is still a fact. The fiscal consolidation and tax figures related to goods and services are very positive indicators, as ultimately it should reflect in sovereign ratings. Ultimately, the improvement in sovereign ratings will also help attract global investment into the economy. Investment strategy. Let's talk about the investment strategy. A day after the speculation about the earliest possible interest rate cut in March was dispelled by the Federal Reserve, investors turned their attention to a series of highly anticipated earnings reports and Friday's employment report, leading to a rebound in the US stock market. The 3 major US stock indices generally rose, with Nasdaq index showing the largest gain back in the domestic market, after reaching new highs on Friday and challenging the previous peak. The index failed to effectively hold its ground and experienced a pullback. From a technical perspective, it has filled the gap from January 17th and the associated risk has been alleviated. However, as the market failed to continue its upward breakthrough on Friday, the current position is at a decision point. 2 possible scenarios may unfold. First, a continued strong upward breakthrough, maintaining a bullish trend, allowing for additional positions to be taken or existing positions to be held. Second, a retracement after encountering resistance at the previous high, with support around 21,200. There is a high probability that the support near 21,200 will not be breached significantly after the adjustment, leading to continued consolidation within the range. In summary, from an operational standpoint, it is currently not advisable to open new positions. For existing profitable positions, it may be prudent to hold and wait. If there is a breakthrough of the previous high, additional positions can be considered. That will be all. Thank you.